Good morning, ladies and gentlemen, and welcome to the Leadership in Insurance podcast. I'm your host, Alex Bond, and I'm lucky to be joined by Joel Pridmore, who's the MD of Frontier Global Underwriting. Good morning, Joel. How are you doing?
I'm well, Alex. How are you, mate? Thanks for having me.
Yeah, not at all. No, I'm good. I'm glad. Well, let everyone into a secret. It's Friday. I'm quite pleased it's Friday, and the sun's come out for us as well. But despite the accent, you're based in London, aren't you? Is that right?
Yeah. I've been in London for going on 2 years now, and before that, actually in Singapore. So I haven't been in Australia for over 3 years now. So I haven't lost the accent though, which is good.
Yeah, and you've brought the artwork with you as well, right?
Yeah, I've got my multicolored wombat in the background there. So something quite a famous Zoom edition. Yeah.
Actually, I've got quite a British background, but it's quite morbid, so I tend to cut it out. But look, Joel, as is usual, the format on these things, I thought it'd be useful. Obviously, you're leading a relatively young MGA. It'd be great if you could kind of give us a bit of overview of the business and what your particular angle is.
Yeah, sure. So I might go right back to the start. My business partner, Sophie, and I had both spent our whole careers at large corporates. Both had actually started on graduate programs at different large corporates. She was at RSA, and myself, I started at AIG way back. And, had gone through and had some amazing experiences, different parts of the world. About, I guess, three and a half years ago, sort of had some feelings. I'd been having them for a while that the market was sort of in a strange place and was quite dislocated and quite nonsensical, particularly in financial lines insurance, which we were both a part of, and then particularly more so the D&O market, which I was part of in Australia. The premium pool there versus the pipeline of claims for the class actions, particularly, if you just did some basic analysis on it, you could see that there just wasn't enough premium in the pool. And so I thought it's not going to be long until something happens here. And, I think that there was just a bit of a perfect storm over and over, a lot of nat cat, class actions claim settlements started to occur in the D&O market. Then there were issues with banks, as there often are, the large banks around the world, with sort of money laundering and similar type of investigations. And it just sort of came together, which is...
And I suppose that's a key thing. You and I talked before, and I was saying realistically, it seems to be you've either got to have one or two things: unique distribution or unique products. It sounds like you're trying to do a little bit of both. Is that fair to say? Or?
I think that's a very fair statement. I think that having that experience, there's two things that we have, I believe. There's a stigma about Latin America and emerging markets, particularly banks. Yeah. And there's also a bit of a fear about Australia and what's gone on there with particularly the class action and claim environment. It's funny because Australia is almost viewed everywhere else in the world like Australia used to view the US, like something big and scary. Mm-hmm. But I think if you've grown up there and worked in that market your whole life, and you understand the dynamics and have always taken time to understand the dynamics, that it is a region that can be written profitably, but you need to know where to play, how to play, and who to play with.
Yeah, 100%. No, and it's that geographic expertise that I think so interesting to talk in the context of kind of talking about. I've been doing a lot of talks about artificial intelligence and knowledge. And the argument about, will that replace underwriters? Will that replace? And the thing that comes back is that, there's still there's always going to be room for very specialist underwriting. And I think MGAs personally seem to give a platform for underwriters that are genuinely specialist and genuinely niche. You're probably going to agree with me because that's what you do, right? But I do think, I think objectively, that seems to be the platform.
I think it's I love the discussion about this, to be honest. I think especially in classes like directors and officers and PI and crime, where inherently a lot of it is about human behaviour, I think there has to be a very smart AI model and robot that could ever replicate understanding that to the degree it needs to be, which is why I think about how useful Zoom and other telecommunication mediums have been during this pandemic for underwriters, because you get so much out of the face-to-face. And I do really insist, my brokers, that we have client calls as much as we can, because that interaction tells you a lot about a client, what their attitude is to their business, what their buying behavior is to you as an insurer. I just don't think AI can do that, to be honest. And I think in these classes, as I said, that inherently human behavioural as well as financial and economic, there will always be a place for an underwriter. Yeah.
Yeah, it's interesting, isn't it? Actually, I think particularly your classes of business, it is about behaviours, and it's like how intrusive can we be to assess the risk? Do we, with the executive class, do we have behavioural characteristic profiles of them, which might kind of lead us down to kind of knowing how much risk exposure we've actually got, because. And what happens when they change, and with the frequency they change, and I think it's massively fascinating. And obviously, all the guys that have got AI tools will be like, yeah, it'll get there. It's just not there yet. But I think the theme has been actually that all that will happen when they do come in is it will just give tools to people like you to be better at the job. It's just to enhance the kind of understanding of risk, I think.
Yeah, I agree with you, mate.
Yeah,
100%.
Yeah. What do you think about the MGA platform generally? Obviously, you made that decision to come out of a very good career, very safe, secure.
Yeah.
And I know you said there was this business opportunity, but what makes you kind of make the leap of faith into that model? Is it just something that you couldn't not do? You owed it to yourself, or? Yeah, I just kind of the mindset of kind of starting a business when you fundamentally are doing a similar job but with much more security. What made you make that decision?
No, it's a good question. I think at my heart, and I think a lot of people would agree with this, I think I am entrepreneurial, and I always have been. So in many ways, working in big corporates, while it was nice and to gain that experience, I could get quite frustrated with the way that they sort of operated and were, I guess. And I guess I've always been a very client-centric underwriter. I know that every underwriter says that, but I truly was clients first. I wanted to know about their business. I wanted to learn about it. I was very focused on that. And often I think in corporates, agendas can get in the way of that, and can stifle, the client centricity side of it. So I think that having the ability and the autonomy and freedom to be able to give my clients what I think they actually deserve was a huge attraction for me of this model, because the value, anyone can talk about value, but at the end of the day, value is what you give.
Well, obviously as a guy that's runs his own business, I totally agree with you. One of the things I'm a bit I'm a bit of a control freak about is the proposition. If I can't control the whole proposition, can I control what I'm offering, and therefore the value? I completely agree that. Why did you make the decision to go and get investment and not plug into kind of like an existing MGA and just offer them a different product and geography?
I guess like yourself, I wanted to be the controller of my own destiny, so to speak. But I also, call me sadistic if you want to, but the investment pitch is a thrill. I loved it. I loved having, that idea and that passion and pitching, and that was an experience in itself. And given a large amount of my book is funds management, I think it gives me more empathy to those guys as well, having done it myself and knowing the process and understanding the stresses and things like that. But at the end of the day, I think I talked about it earlier, one of these incubator models where you can essentially plug and play with every bit of infrastructure there for you. I think they have their place and certainly work. But I think the experience that I wanted was to start something literally from scratch, like walk into London, which I'd never worked in London before, by the way. Source an office, get computer equipment, source service providers, and then build it from there. And it's, I tell you what, it's been extremely stressful at times, but extremely rewarding as well.
Yeah. I found that. I think there's definitely something in. We often talk about on the podcast about there being two schools of thought, and the European side of sort of the sort of startup journey tends to be bootstrapping it, then go and get investment. And the American school of thought broadly is get an idea, put it forward, get investment. And obviously you're sort of following closer to that. But I think either side of it, there's something really humanizing about being there in your office on the first day, realizing you've got no tech support, you've got to plug in your laptops, you've got to find them, you've got to source the technology. One, it gives you a newfound respect for all the stuff that you used to have. Like, my laptop stopped breaking this broke this week, and I've been on the phone to Dell for God knows how many times, and you just go, oh, wouldn't that be lovely? And I think it gives you a recognition of like how all-encompassing these companies are, but also I think it makes the wins all the sweeter. When you start getting those few clients in yourself, those early stage clients, is it's you, your business partner, a chair and some laptops, and you're off the ground. What have you done about embracing technology? Have you really tried to make that a core part of the offering, or?
I think we're a combination. I think that you can't be an MGA nowadays without really good data capture. So we spent a lot of time. I didn't want to be one of these MGAs who use Excel spreadsheets. That was just a no-go for me. And being at big corporates, the irony is they'll have systems, but you inevitably end up using spreadsheets because the systems are so clunky and poorly designed that you can't trust them. So I also didn't want to go down that route. So we did a bit of time sort of doing some research on some larger providers, and then also being a startup, looking at startups and startup providers of management systems and things like that. But what was important for us was that they had insurance background. The provider we settled on, both the founders there had strong insurance background, had actually been at a large MGA and then wanted to go out on their own. So they understood, as simple as it might seem to all of us, the jargon in insurance is ridiculously complex at times, and trying to make that fit in a sensical way can be pretty tough. So having someone that I could talk to about, an IMI policy and a PI policy being part of an IMI policy, and there being, 3 standalone aggregate limits and 1 overall aggregate limit, you know what I mean? Like, that was just so important. And essentially we designed our own underwriting management system with their help, obviously, which, like all IT projects, it has its challenges, but I think we've got somewhere now where, we can capture the data so well, we can manipulate the data, and we can produce reports for analysis really well. And I think that's just such a game changer.
Yeah, I completely agree. I sort of sit on two sides of the fence with systems, and I mean, they're so configurable now. And obviously I'm only speaking from my perspective, so my CRMs that I have to run. One of the challenges I had was they were so configurable that I actually sort of said, this is I found that too much of a challenge, because it was like, you've got to literally sit there and go, right, what is the perfect process, and map it out. And it was almost a full-time job getting that going. So it's really time consuming. So hats off to you for sort of doing that. A large part of my role is finding people new homes, and I like the MJ space. I think it more speaks to me as an individual. I like the entrepreneurial nature of it. But obviously, when I'm talking to people that have probably come from an incumbent player, big player, or a Lloyd's player, sometimes doesn't always get the best press, the MJ market. Why do you think that is?
I think it's a great question, and I 100% agree with you. I think for a lot of, maybe since my career started, Alex, to be honest, I think a lot of those soft market conditions put a lot of emphasis on carriers using MGA purely for top line distribution. And I think the only way that you can succeed as an MGA, to be honest, in a soft market is on price. Unless you have true commitment to value, which is ours. But it's very hard to operate with true value, and that absolute conviction to adding value and not just competing on price is hard. It's really hard. And there's probably that stigma around MGAs that, they cannibalize the market, they cut pricing and drive things down. But at the end of the day, the MGAs wouldn't be there without the carriers providing them those support. So, both are complicit. I just think it's probably been an oversaturation, to be honest, and perhaps utilised for top line reasons as opposed to profit.
Yeah, I don't think it's been utilised in the best way. I think it's a really good way. I mean, someone was on the other week, and we were talking more about insurtech projects within large organisations, and you could use the MGA model to roll out a product suite that you were unsure of, in fact, and utilize it from that point of view. The only problem with that model from someone employed within it, obviously, the long term is it might get swallowed up by the carrier themselves. But I just don't think they always utilize the model the best way, and I think some of that's to do with its bad press. One thing that I wanted to touch on was about capacity. Do you think we take? It seems to me that we take too short-term an approach to that. I find it a bit. I don't find it odd because I know it's about control and management and governance, but having to kind of renew your capacity every 12 months seems inefficient, if nothing else. And really, because if you've got controls on that capital, I'm sure that you could say, even if you've got a 3-year deal, if it's not performing, then I'm sure there's ways of dipping in. But every 12 months doesn't seem like the best use of everyone's time, I don't think.
Yeah, I mean, I would tend to agree with you. I think that obviously at the moment it is what it is, but I certainly agree with your sentiment. I think that the value proposition to clients and brokers is sustainability and longevity, right, of the relationship, particularly in long tail classes.
Yeah.
So yeah, I mean, sort of to walk that talk would make longer term deals more relevant and appropriate for sure. As you say, I mean, there's obviously reasons behind it, and I'm sure, hopefully that might change moving forward. But yeah, while longer term stuff would certainly be ideal for everyone, I think, for the time being, if you can demonstrate that, you're adding value, you're doing what you can say, you've said you will, and can keep continuing that. And I think transparency is key too. The closer you can get with your carrier, which is a great thing about us having, 100% at the moment, is we are developing really deep relationships there, and we want that. That's not just with the London-based staff at Travellers, but also the US, and I think that's great. I mean, that's all throughout the world, right? And that's what we really want. So what I'm saying is I don't disagree with what you're saying, but I guess for the time being, you have to be grateful to be able to be given this responsibility. At the end of the day, we take it so seriously because it is the capital of our carrier and their shareholders, and we take that immensely seriously.
Yeah, no, I completely agree, and I suppose particularly in your class of business, it's not just about getting capacity; it's getting the right capacity. And obviously, you've got a top level provider of that, which is hugely important, I'd imagine, for your line of business.
It is. I think particularly given the personal nature that directors and officers can have to the individuals, the cover, I mean, D's and O's really need to be careful who the providers are. And, if I was on the board of a listed company, I would want, the highest level security, particularly, if it's an MGA, I'd want to know who their carrier is. And, that's a huge selling point for us. I'm extremely proud, really, really proud to have Travellers as our capacity provider.
Yeah, no. And so have you just gone through your first renewal phase? Yeah, we
have. Yeah. We pleased to report that we've got commitment and the renewal went well. So that's effective 1st of February, which is fantastic. Yeah, really happy with that. I mean, even then you talk about the technology and the value that the data and our reporting could provide in that process was amazing. And I think that the capacity provider in Travellers appreciated that a lot as well.
Yeah. I imagine a little bit of it's about making people's lives easy, right? And you're trying to have those conversations.
Absolutely.
You're able to provide the data on the nose straight away. Then that's a huge reassurance for anyone to say, right, these guys are in control. They know what they're doing. Let's let them get on with it. Presumably.
Totally. Yeah.
What's 2021 looking like? Not just for you, but you know, in your marketplace, and what impacts has the pandemic had, if any, on kind of things like rates and conditions?
Yeah, I might go with the general market first. There's been obviously, you know, a lot of contraction of capacity over the last couple of years. I think that is alleviated somewhat with a few new entrants that'll come into the market in 2021.
Mm-hmm.
But I think people have realised that, you know, putting out really large chunks of capacity on deals is a thing of the past. You know, when claims in this space happen, they happen big, and if you're too exposed, you're toast. So not only is there a contraction of providers, there's a contraction of limits and obviously capacity available for programs. So I think that the hard market is certainly here in 2021 and probably 2022, and I think the pandemic will obviously only add to that. That being said, though, I think that, you know, those models who are those providers, MGAs or carriers who have very strong strategies around what they're targeting and why, and stick to that, will do well. And at the end of the day, the reason we're here is we're here to pay claims, aren't we? But we're also here to make profit for the carriers so they can continue paying those claims. So, you know, we don't shy away from the fact of our roles on both sides.
Mm-hmm. And what about the business? So is it just how is it just you and your business partner today? Have you got more people in the door currently, or what's the plan?
Yeah, I mean, 2021 is exciting. So I think I chatted to you about this when we had our initial chat. We've actually, we've incorporated a local subsidiary in Australia. No, I'm not moving home. Although the weather there at the moment is pretty tempting. So we've had our Lloyd's approval for our Australian subsidiary, and we are looking to open doors there 1st of March. So, you know, that's really, really exciting with a local staff member. So that's really exciting for us. You know, the key is getting closer to your clients. And, you know, although I still deal with my local network back in Australia, the brokers and clients, just having that commitment on the ground with a financial services license and being locally regulated is a massive. We're in the process now of hiring a graduate too to assist Sophie and I in the everyday role globally. So that's exciting too. I mean, you know, just interviewing some of these kids, I call them. It's funny that using the word kid, isn't it? You bet you do. Yeah. You know, they're so incredibly intelligent. And some of the things they're studying nowadays is, you know, I just think, wow, like that's so cool. But, you know, the opportunity that individual will have with us is they'll essentially have not only training to become an underwriter, but you know, an on-the-job apprenticeship in how to run a business, which I think's, you know, just as invaluable because, as I say, I was on a grad program originally and, you know, but was very underwriting focused. I didn't have a clue about what finance did or what processing did or what admin did or what, you know, credit control did. And I think when you can put all those parts of it together, you become a much better business professional. Yeah.
I think that's and I'm not making a comment on your age, Phil. I think that's where the better grad programs we see now are absolutely. It's a whirlwind tour of the whole business, and you're absolutely right. But the thing is, you'll never get as close to it as you will a small company. You know, in my personal journey, I used to work for one of the world's biggest recruitment companies, and that was exciting because it was, you know, had all these possibilities to move abroad and get promoted, but I always held dear. I used to work for a company called Eames Consulting, and I think I was one of the first 20 employees, and now it's this big 150-person business, and you're so close to everything, and that's at 20 people. Let alone, you know, when it's a handful of people, and then you get to see everything. And again, it goes back full circle to the start of this conversation. I think it makes you respect other things. Yeah, even if that person moves on, and you know, we want people to stay with us forever, but chances are people move on at times. You know, I always imagine that journey that I think you get such a strong toolkit when you've worked in a smaller environment because, you know, there's not the support structure, so you have to get hands on and you have to appreciate. Why do we make profit? Well, because we need to keep the lights on. And why do we do all these things that we do? There's much greater visibility, so I think it's hugely beneficial. And longer term than that, what's your kind of vision? Do you want to grow a large kind of sustainable MGA? Are you going to build it to sell, or what's the thought process?
Well, I think these, these syndicates in a box are really exciting. I am quite an ambitious person. I think that model really appeals to me. So, that might be an avenue for us down the track.
Mm.
Obviously, that requires a lot of capital, but, if you're successful, why not? And you've got to aim high, don't you? Our key is, Alex, I think that it's back to that point about the soft market and MGAs only competing on price. Our model isn't to compete on price. It's all about value. And, we've had clients all the way our journey, our whole careers. Munich Re isn't known for competing on price either. And, any clients I had, there was a reason why they were with us. It wasn't just because we were cheapest. So in that respect, I don't see us growing to the levels of some of our, larger competitors in this space who just will write for volume. We really see this as a very specialty focused play where we can add value, get close to clients, have sticky business. But certainly I think where there's complementary products, I mean, cyber being, an obvious one for the lines of business we write, but then other things as well. So we'll get the right people in and it'll take care of itself, but at our core, it's our clients and our profit for our capacity providers.
Yeah, absolutely. No, it's a good important point, I think, as well, writing for volume versus value. And I think probably going back to the MGA model and some of the criticism, that might be it, because, it's because of the remuneration structure, it can be tempting to write loads of business. But, I think the best ones, you're treated like it's your capacity, right? It's the only way you can do it. It's the only way you can underwrite. And it sounds like, as well, having a long-term vision of it and saying, right, I love that. You're going for syndicate in the box. And what better evidence to say you can do it than making an MGA successful?
Yep, I totally agree. I love that concept by Lloyd. So I hope it's really successful.
Yeah, no, likewise. And there's certainly, from the conversations I've had, there's quite a lot of people trying to investigate it. And yeah, we always love new startups coming into the business. But what I think you're focusing on, which I love seeing more of, is genuinely trying to innovate products.
Yep.
I think we can be very guilty, particularly in Lloyd's, but in lots of other markets, of getting excited about new entrants. And then if they're not doing anything different, then all we're doing is redistributing the same pie. And that's not growing the pie. I want more pie, is what I'm saying, Joe. I think it's, we need to create more of a market rather than just kind of moving different teams to different places. And that's why it's good to get new. I think we do a better job than we did. I've been in this market 16 years. I was a graduate into insurance as well for RSA. Yeah. And I certainly at that time, we did a dreadful ability to get people into the market. From graduates, but I think we're better at it now. But it's always great to hear you bringing on a grad, because did you know much about insurance when you stepped up? You were just like, this is the grad scheme, this looks all right, I'll do this. I don't know.
I have a really funny story in this regard. So my undergraduate degree was criminology, and I originally wanted to be a police officer, federal police actually. And the more I sort of learned about the criminal justice system, I sort of became less convinced that it was efficient and what I believed in. So I sort of graduated and thought, what am I going to do now? You know what I mean? So I guess like a lot of other grads, I went to a recruiter and, threw my hat in the ring and my CV and what I'd done. And I remember getting this phone call, and I remember the recruiter's name. Her name was Angela Martin in Brisbane in Australia. So hi, Angela, if you ever watch this. And she said, do you know who AIG is? And I said, I wouldn't have a clue. And at the time, they were the third biggest company in the world, right? Not just insurer, third biggest.
Yeah.
And she said, I've got this role. I think you'd be fantastic at it. I'm like, yeah, okay. So I sort of put my my Lowe's, you don't have Lowe's, but it's sort of like a very, very cheap department store. I had a Lowe's suit and went to this interview without much of a clue and was successful, And, that grad program at the time was it was called the Professional Associate Program. I don't know if they still have it, but it involved going to New York 3 times for 2 weeks at a time and getting trained in head office. And for a boy from Brisbane going to work on Wall Street, it was just like, I've made it, you know what I mean? So, I've had a really interesting journey. I essentially fell into it, which a lot of people say they do, unless you have a father or an uncle or a grandfather who's been part of it, I guess.
Yeah. I think, your story echoes so much everyone I have on either is like hereditary family history and then they follow the chain, or they just fall into it. And but I think that's sort of evidence of we just don't do a very good job at promoting it. You know, I was talking to someone recently about, you know, insurance as a social good, you know, looking at like green financing, you know, just the fact that, you know, it enables business, which is why people get upset when it doesn't, which is happening lately, but we won't go into that. But, you know, it's an enabler of so many things. It's so international. And I just don't think we do a great job because, you know, I'm the same. I fell into it. My story was simply that there happens to be a really big RSA office in the town where I'm from, and they were having a recruitment day. I had my degree and went, I don't know what to do. So I just walked in and then I fell into a recruitment, which is the other thing you fall into. But no, I just think it needs to do a better job because I think there's so many good opportunities in it. And, you know, you're obviously evidence of that. And like you say, you know, what a thing to go and work on Wall Street when you're, you know, fresh grad and it's exciting.
Yeah, no, it was fantastic. I agree with you. I think that, you know, there'd be very few, you know, graduates that would probably even know much about what insurance does. And, you know, given the size and scope of the industry, it's quite sad, isn't it? You know, you talk to so many of these finance, law and economics graduates and all they want to talk about is investment banking or, you know, something like that. And I think, if you really knew what that job was like, I mean, don't get me wrong, you know, I know they make a lot of money on the whole, but it's hard work. Well, not saying insurance isn't, but, you know, the scope and the exposure that you get in insurance is just as broad, if not broader, than most finance professions. And you know, I still love my job. I think it's amazing. So yeah, you're right, mate. We need to do a better job all around.
Yeah, no, completely. But I've moved away from that end of the market, but I definitely kind of project wise, I'm talking to a few clients at the moment about how we can do better at it. And I think it's, you know, even things like the actual jobs within it, if you know homogeneously, what insurance is, you know, I didn't know what an actuary was. I wouldn't have understood the difference between an underwriter and a broker. And then even when I did know, my exposure was like underwriters dealt with like car insurance, home insurance. I didn't understand you know, what political violence cover was or your market, financial lines, which I would have found really, really interesting. So I think it's great that you're taking on a grad, and I hope you manage to bring on more because I think the more people we can get into the industry, the better.
Yeah, I agree, mate. It's good to give back too. I'm big on that. So, no, we're looking forward to it, and you know, just hope we can bed down the right one. Yeah,
fantastic. Well, look, that's a really positive way to end the podcast, bringing some new blood in. Joel, thank you so much for taking the time. I really appreciate it.
It's been a pleasure. Thanks for having me on. I think you know, you're doing a great job, mate. I've looked at a few of them, and you know, your knowledge of the industry all round is really impressive. So I wish you all the best for future ones as well.
Thank you. You've just made yourself a clip I'm going to share virally now. I'm going to use that on my client pictures. Listen to this guy. But no, I really appreciate it, Joel. And yeah, thanks very much. Have a great weekend. I wish you all the best.
And you, mate. Thanks a lot.
Take care. Bye-bye.
Bye.